Welcome everybody to the MIDAS list panel at Venture Atlanta 2021. We are so excited to have you back, and we hope that you're having a great conference. This MIDAS list panel is a redo from last year. It was such a success that we invited two fantastic venture capitalists who appear on this year's MIDAS list to participate with us today.
Thank you, Rachel. Good to be here today. I'm Jan Hammer, partner at Index Ventures. We're a global venture firm. I'm based in London, but our offices span from Geneva to London to San Francisco. We focus on early stage, but as a fund, we really truly span from seed investing all the way to IPO. Venture is really the sort of the sweet spot, and that's where most fun is. And between the sort of the two halves of the house, part being consumer and part being enterprise, I spend my time on the B2B side, although I've done a few consumer investments and with a particular focus on Fintech. So we'll probably come to a couple of companies that you'll want to talk about during this interview. And thank you again.
Excellent. Lauren?
Hi, I'm Lauren Chladny. I'm a co-founder and partner here at Acrew Capital. We're based in the Bay Area, and we've actually only been around for about 2 years now, since 2019, but our team has been investing together for the better part of a decade. We've done historically and currently a lot of early stage, so leading and co-leading seed, Series A and Series B investments in 4 key verticals, which are Fintech, which I lead and where I spend most of my time, community-driven consumer security and data platforms. And we recently launched a participatory growth stage vehicle as well, which we call the Diversified Capital Fund, which actually raised from 70% diverse LPs. And so there we're trying to help add diversity to the cap tables of growth stage companies, investing $10 to $15 million checks typically, and in the same categories that I mentioned for early stage.
Well, thank you. And again, really appreciate you both participating with us today. As we kick off, and maybe I'll send the first question your way, Jan. Early stage investing and making bets on companies that are in the the early phases is not for the faint of heart, let's say. And so I look at Robinhood, for example, one of your early investments, and the founder said, look, we had 75 investors slam the door in our face before Jan made the investment. So tell us, what caught your attention about a company like Robinhood or others, and what gave you comfort that this was the right bet to make?
You're right. During early stage investing, you sort of don't have many tangible points to diligence or to hang on to. So you are, by definition, making a leap of faith. In this case, Vlad and Beju were really determined to build a huge company. They, out of the get-go, identified a really big market, which is investing brokerage. And I guess where sort of where they sort of, in a way, made it clearer that there was a true huge business to be built was that they sort of pointed to the market that it had already existed. There had been incumbents in this market, and the market cap of that sector had been for quite a long while in the hundreds of billions of dollars. I guess for me, the major sort of aha moment was when they presented their idea, was this kind of notion of platform shift. And I guess I was pretty influenced by my former job at a fund I worked at before Index, where one of the successful investments was E-Trade. And there the platform shift was from branch-based brokerage, and you'd sort of walk up to a building in order to make your investments. And sort of they made it self-serve, originally on the telephone and then on the web. And Vlad and Beju were pretty clear in articulating that there was another platform shift about to happen, which was to mobile. So from web and sort of an old interface to an intuitive, beautiful product with friction removed. And I guess the final ingredient, to keep it brief, was that they truly projected commitment and perseverance and grit and clarity to go and make it happen. Of course, and we'll talk more about startups, but there's a lot of obstacles on the road. But they had sort of a certain clarity of vision from day one that this is what we're going to build and it's going to be big. So I guess those were sort of the formative moments when making that decision, that in a way it wasn't such a difficult decision when you sort of projected what they were pitching in this pretty vast market, kind of a few years ahead what it could be.
Interesting. And so Lauren, the notion of disruption of the status quo or platform change, I think, has certainly been part of what you've done as well. And maybe whether it's focusing on Chime as a starting point, how have you thought about disruption and both the opportunity and also the risks associated with that when you've made investments in early stage businesses like Chime?
Yeah, I'm happy to start with Chime, and I would say you'll probably hear some similar themes as with Jan. But we're a very thesis-driven firm, so we do proactive thesis work every quarter. I mentioned that fintech is our largest category, and it's where I spend all of my time. But we're really thinking about subcategories within fintech that are of interest to us based on those platform shifts, based on societal and consumer trends, and then going out and proactively finding companies that fit those themes. So at the time with Chime, I had developed a thesis, which was, it doesn't sound particularly novel now, but back in 2015, 2016, this idea that millennials were entering the workforce. They were the first population of truly digital natives. And frankly, they'd come of age during the Great Recession and were inherently distrustful of legacy financial institutions. And so this notion that a digital first bank could exist seemed very apparent to me. And as I thought about all of the categories within fintech, a Robinhood-like model would have been the other one that would have made a lot of sense. But for me, the most intuitive was, where does your source of income come in? That's the entry point to all other financial services, and it's your bank account. And so to me, that was an obvious place to look. And then when I met Chris and Ryan, their combined depth, Chris with fintech and deep financial services expertise, from Visa and Green Dot, and Ryan having been, a all-star technologist at Plaxo and Comcast. It was the right combination. It sounds a little funny to say, but the reality is finding both kind of financial services and or fintech domain depth, as well as real kind of technology product chops on a fintech team was very rare back then. And it's still rarer than you might imagine, because oftentimes people come from industry thinking they can make it marginally better, or they come from tech looking at financial services and saying, I could build a better product here, but they don't know how to see around corners and they don't know what they don't know. And so it was the combination of those skills coupled with that thesis that got me really excited.
I love that notion of the combination of sort of technology disruption with enough industry knowledge to be able to see around corners. I think that makes a lot of sense. Jan, one thing that you've talked about in the past is looking at investing in companies that solve important problems. And so I would love to just understand, if you can for us, how do you quantify important problems? Like what does important mean to you? And then how do you translate that into the investment thesis?
Yeah, there's many ways to kind of go at this question, Rachel, but I guess, my view here, and at least sort of my reflexes are, sort of heavily influenced by sort of looking at later stage. And I think it's, often early stage investing can sort of get bogged down in sort of really the sort of the narrative of the startup and sort of the idiosyncratic sort of terms. This is what we're changing, and then you're still waiting for the customers. And when you sort of really take a far broader look at sort of what's happening in the society, in the economy, it's no coincidence that sort of the markets and the analysts are organized by sectors and by SIC codes and all those kind of good things. And first starting point is to look at are there public companies in that sector. And I'm sort of not trying to say that sort of what's not being invented cannot be invented, but you can look at the demand dollars ultimately, and historically a lot of investment has gone into just sort of provision of technology. And if you look at sort of the very large exits that have happened in the industry in the last decade, they've actually been users of technology. Companies that deliver a product or a service for huge number of either enterprises or consumers, and whether that's Uber in transportation, or whether it's healthcare companies, whether that's food delivery. These are massive categories. So I'd sort of start with sort of where the demand sits. And I think Lauren said something really interesting about, I think she referenced the obvious place to look. And if we talk about fintech, you look at the sort of the banking market caps, and the number 50 world's bank has a bigger market cap than 50 billion. And so it may seem sort of pretty mundane to say we're going to reinvent the bank, but there is evidently a huge demand for those kind of services. And I think that's where it really starts. You're really solving a sort of a need of masses of consumers or enterprises. And that's really the approach we take to investing. We rarely, if ever at all, at Index would invest in a team that would sort of go and lock themselves in a garage and sort of think what problem they can solve. Rather, pretty much every single entrepreneur we back is somebody who sort of acutely felt the pain and an existing problem. And believe it or not, these problems are basic because of sort of the life cycle of what humans do, eat and get transportation and get healthcare and get education. And I guess that's where that kind of that thematic investing sort of leads us. We're looking for big pockets of demand.
That's really helpful. And you sort of segued into the next question, which was, as you look at investment opportunities in these early stage bets, how important and maybe how do you stack rank or prioritize the market, the team, and the technology itself? So Lauren, would you mind taking a crack at that one?
Sure. I'll be brief with this one because I think it's an easy answer for me. I think people first always, because markets change, technology changes. And so to me, so many successful companies, by the way, Chime included, have pivoted from the early days. And so you just have to believe that the team is nimble enough to adapt and to take the cues from the market and to learn. And again, in fintech, this isn't the case in every category, but in fintech in particular, I like to see some domain expertise because it speaks to their ability to see around corners and navigate complex regulatory environments and the like. And then market is really important to me after that. You can't really have, it's hard to get excited about an investment without a team that you love, a market that you like, and some competitive edge. But I think, the market opportunity would come next for me. And then, and then technology, it's technology, but it doesn't always come in the form of sort of, tech IP so much as some sort of moat. So for example, right now in fintech, I see a big opportunity in multiplayer fintech. And so those embedded network effects would be another example of something that could kind of create that edge in my mind.
Jan, are you stack ranking the same?
I've got a similar view on it, although slightly different. I think it depends whether you're looking from the perspective of sort of being analytical, which way you prioritize, or whether you're asking the question from the perspective of like, do you want to make the investment? I think on the latter, it's absolutely and only the team, because at the end of the day, we have choices, and Lauren's firm and our firm and many other investment firms are ultimately allocating capital between many projects that they could possibly fund, and equally those entrepreneurs have choices. So there's a sort of a market matching mechanism, but we're human at the end of the day, and we're making choices who we want to work with. And I just, in a sort of a very fast pace and often sort of mechanical world, I sort of would love to bring it to sort of the human dimension, that we're choosing to work with people that we want to spend a lot of time with, and ultimately helping them build their company. I think on sort of, if you just ask from a purely analytical perspective, I'd probably say it depends by stage. In the early stages, if the market doesn't work out, you are at the end of the day making a bet on the team to find that product market fit, which kind of the bad word is called pivot, but you can take away that negative connotation. It's just the team is looking for ultimately where those demand dollars are for that product that they've built. I think in later stages, if the market doesn't exist, I think that becomes a real problem, because no matter what the team, if you sort of inherit or step into as a new sort of hired management team, if the market doesn't exist or turns against you, you probably don't have much room to maneuver. And ultimately, if you want to build a multi-billion-dollar revenue business, you cannot do that in a small market. So I think as you progress through stages, market wins over time. But in the early stage investing, which Lauren and I are in, we at the end of the day, we're backing people.
And I think that is a really good distinction, and I completely agree with Jan. And I would just add that, like, it's also relevant at the early stage when you think about top of the funnel in our investing process versus like the ultimate investment decision. I think this is sort of what he was alluding to too. It's like, as entrepreneurs, if you're trying to get our attention, if you're on paper not immediately sort of the most obvious team, what matters is that market and tech story, right? Like, that's what's going to make us want to meet with you. But then at the end of the day, if we make the investment, it's because you've convinced us to believe in you. So just trying to make it, from my perspective, a little more concrete, like telling that market and tech or whatever the defensibility story is in a compelling and succinct way up front can really help you get in the door.
Once again, Lauren, you've done a nice segue into the next question, and I think a good part of this audience is entrepreneurs who are looking to be able to catch people's attention like yours and Jan. So I often find the best way to tell people how to be successful is to give real world examples and stories. So my next question for the two of you, and maybe Lauren, I'll start with you on this one, is talk us through one deal that you've sourced that you're really excited about, and how did you become aware of the company, and how did the entrepreneurs get your attention enough to really have you dig in and do some diligence?
Yeah, I was thinking about this question, and so this may not be the most the example with which you can extrapolate the most, but I think it's kind of an interesting one, which is, so one of my more recent deals, a company called Kettle, which is a next-gen reinsurer. So they're building a reinsurance company for climate risk. And I can talk a little bit more about why. But it was actually it's a unique sourcing situation for me, which is I actually knew the founder, but and I knew that he was working on it, and I, had been considering doing something in this space for a long time. But he didn't really have a concrete idea or a team. And so actually, because I had, some connection with him, and because it was a space I was interested in, I'd give him, 15 minutes, 30 minutes to chat, every couple of months to just hear how the idea was progressing and give him feedback. And as it crystallized and got to be something that was, initially it wasn't something that deeply resonated, but it became something over time. And I heard how he thought about it, and the feedback that I gave him got incorporated into the idea and into the team that he created around him, such that by the time it was a real opportunity, I was so bought in that, I absolutely wanted to move forward with the deal. And now I know that's probably harder to recreate, but for those of you that do have, even loose relationships with venture investors, it can be a way to sort of bring people along in your process and get them to have that foot in the door. And what's really interesting about this company to me is, basically where they came to was to create this full stack, eventually a full stack reinsurer, and climate risk is so unusual in insurance because, reinsurance, which is the capacity that drives the insurance market, is underwritten based on completely historical data, which doesn't work with climate, and particularly with wildfire where they're starting. The last 10 years are not going to predict the next 10 in wildfire. And so they came up with this really, really interesting model over time. And that was kind of one of my more recent sourcing examples in a company that I'm really excited about.
That's really interesting. So I think that the moral of the story is, if you do have the opportunity to engage and get advice along the way, it really does help with the buy-in when you get to the point where you're looking for funding. Got it. Okay. Jan, how about a story on an interesting source deal that you're excited about?
Yeah, happy to go next. The company I'm really excited about is one in payments. It's called Fast, company that's building a universal checkout. And what they've recently announced is what they're building and or have built and are now implementing at a number of merchants is this notion of headless checkout. In other words, any content, any message, any ad, anywhere in a conversation on the internet or in any communication that becomes a storefront for a merchant. I guess the origin of the story goes to an old friend, contact of mine who was in payments, who then subsequently joined the company as a co-founder, who called me. This is Alison Bar Allen. She called me that there's this guy called Dom who is building a universal checkout company. You have to check it out. So I arranged a meeting, and it happened 2 years ago. We met on the weekend on Labor Day in September, and basically Dom painted this vision back to these simple concepts. He outlined a sort of a democratic sort of Switzerland of a universal checkout, sort of describing the platforms on the internet having all their own kind of partial solution, the consumer being lost because the consumer has to have multiple stored cards, multiple stored passwords and login, and sort of having really a ton of friction any time experiencing basically logging into any merchant website. And it was sort of, I guess there are two sort of morals to the story. One was that Dom was attacking a massive space. There've been a lot of companies on the merchant side doing merchant card processing really well. And there've been a few sort of attempts at sort of the consumer side of payments, although that market, in a way, if you think about it, is very concentrated, because you've got cash, you've got one PayPal, you've got a concentrated credit card market with Visa, MasterCard, American Express, and so on. So there've been sort of little innovation there. And there's this guy who had arrived from Australia to San Francisco and basically taking a stab at this huge opportunity to connect the two sides. And that's kind of the macro picture, huge opportunity. It's so, in a way, obvious, but nobody's doing it. And then the micro of the sort of the story was he'd focused on first the universal login, then moving sort of to universal checkout, and sort of he described the journey how in an extremely focused way he would build step by step. So while the sort of the opportunity and the vision is huge, the sort of the focus to deliver first the MVP, then the product, and sort of then rolling it out was extremely focused. And in a way, one sort of thinks, well, there's this kind of yin and yang that Dom was aiming to build something really, really quite specific, with an addressable opportunity being almost any payment that happens on the internet. And there was sort of the thing that sort of got me on the spot, and we had a handshake at the end of the breakfast.
Excellent. So try and hook up on Labor Day weekend, and you'll catch someone who has some time and ability to spend time digging in. That's a great story.
Yeah, but I would, Rachel, I think, I reflected on the sort of the precedent of it. And in a way, it is a path that many successful companies have gone down on. If you think about Amazon, the initial focus was extremely narrow, become exceptionally good at selling books, any book, anywhere. But then both the vision, presumably at the beginning, but also ultimately the addressable opportunity was to sell anything, anywhere. But you sort of don't go to your initial potential backers saying, we'll do everything, because that is, well, A, not credible, and B, it's just not possible. So I think it's that fine balance between doing something extremely well and that narrow solution solving a real pain point, but then having the opportunity to take it to a really broad market.
I think that makes a lot of sense. And I think when you're talking about, capital efficiency and usage, having a strong focus and doing something really well first gives you the ability to, and maybe the right to win in a broader space over time. So just out of curiosity, sometimes you make an investment and you think for sure it's going to be successful, and for a number of reasons it's not. And there are others where you think you're taking a little bit more of a flyer and it becomes phenomenally successful. Would love a quick story from each of you on one investment that you had that had a very surprising outcome to you, and why that was the case. So Jan, I'll start with you on this one.
Yes, the company I would use for this one is Adyen in payments. The company is approximately $100 billion in market cap today. It's listed on Euronext in Amsterdam, has a global footprint, customers, employees, and shareholders. And it was a company where we led a Series A round in 2011. And again, I go back to payments. It's a big market, proven team. They had a great idea, best technology in the market. So that was all good. And it was a kind of, both then as well as today, as sort of a no-brainer Series A, wonderful company with no, sort of almost no question marks. But here's the surprise. It was really the sort of, as the years went on and sort of going to the meetings, quarterly meetings, there was always a positive surprise, and the company always over-delivered. And you sort of walked out of the meeting in Amsterdam every quarter, and you were sort of thinking to yourself, so how is this possible? And almost always it was the team uncovering a new opportunity. And I guess in sort of equity analyst lingo, it would be sort of ever expanding TAM. So from a payment gateway, the business went to acquiring. From acquiring, it went to processing. from processing. They went after a bank license. After they sort of conquered that part of the market, that they went to the issuing side and doing issuer processing. And so at every step of the journey, the ambition grew with accomplishment. And I credit a lot to the culture and the team, and obviously from the top, from the CEO, from the founders, sort of to have instilled a really humble culture, but one that kind of always strives to build the best without bragging about it. And they have just sort of delivered. And when I look at the sort of what the business is today, I don't think would have dreamt, in those Series A days that the business would be this big. I mean, the whole market has lifted, and I guess I would credit it to the underlying that, the size of commerce has grown, size of e-commerce has grown, cross-border has grown. So the addressable opportunity has grown multiple fold, probably similar to, when cell phones appeared in the 1990s. All of those projections were exceptionally pessimistic relative to the number of phones and smartphones in the world today. But it's still sort of, when you step back, it's always that size of the opportunity, and then the team going to grab that opportunity that sort of makes you wonder, like, these guys have done a phenomenal job.
That's a great story. And I think, again, it speaks to your focus, do really well, and then expand from, always look for the expansion opportunity from there. Lauren, thoughts on your side?
Yeah, I mean, to be completely candid, the honest answer is Chime. I think that it's not to say that what they became is so different than what I expected, but the scale and magnitude and the impact that they've had, it would have been impossible to predict. So, I think, and it's particularly interesting because at the time, like Robinhood, Chime was not a popular deal, and pretty much, I mean, there's been much written on this at this point, but everybody passed, and my thesis orientation gave me the conviction to do it anyway. But I think that there were a lot of naysayers. And so watching them, execute like crazy and then become what they've become, it's just been completely awe-inspiring to watch. And the other thing that I didn't predict about it, which has, created all kinds of new opportunities, is the impact that Chime and candidly Robinhood, and I'm not just saying that because Jan's on the call, I really think these two are, at least in the US, the ones that have really driven this change, is opened the door for financial services to fundamentally be rebuilt from the ground up, right? These companies, I mean, they took existing financial products, they changed them a bit, but they made them digital and accessible. And now the rest of legacy financial services have had to come to the table, and the underlying infrastructure is being rebuilt. And I think that's, because of the success of these two and a few other of their peers that really showed, made financial services sweat a bit and showed the potential of this market. So I think that would have been completely impossible to predict.
Very interesting. Well, I thank both of you. This has been a really interesting discussion. I think I'm sure that the entrepreneurs in the audience are walking away with a few nuggets of what to think about as they pitch investors on their ideas. And just like entrepreneurs have a bit of a bake-off when they're presenting to venture backers like you, rumor has it that each of you are very interested in cooking. And so I'm going to propose that next year at Venture Atlanta, we have a cook-off where maybe some of the Venture Atlanta folks can be a judge for who's making the better dish, not who's making the better investment, but who's making the better main course. So again, thank you for your participation today, and best of luck to you all as you move forward on your new investment.